Boom. So today I want to talk about trading strategies, kind of what they are and what I see personally as necessary elements or necessary pieces to having a fully fleshed out strategy. So in my mind, I like to relate things to concepts that are a little bit easier to understand. So for me, the thing that I watch the most at this point, unfortunately, is basketball. And just like in basketball, not all strategies work all the time, right? So oftentimes we think of, oh, I need to create a strategy for trading. And people tend to limit themselves to just one strategy, right? But as we know, the market changes, there are ebbs and flows, there are different types of markets, different environments, and maybe your strategy doesn't necessarily apply to all of these. So when I talk about trading strategies in this context, we're not necessarily going to cover like what I'm doing. I think that it's more important to conceptually understand what the pieces are and the requirements are of a trading strategy. And just like in sports, not all strategies are good, right? Strategies need to have a certain amount of information, a certain amount of thought put into them to actually end up being effective when we're trying to utilize them in the market. If we think about it from a sports perspective, you can't just go up and say, hey, my strategy is to win the game. My strategy is to make more buckets. My strategy is to just stop them from scoring. That's very singular. And, yeah, while that is the goal, the ultimate outcome that we're trying to achieve, it's not really a strategy. There's no real ideology put into place that's going to help us do anything. So I find a lot of people, when they think about their trading strategy, they really do look at it like that. They're like, oh, I want to buy the bottom. Oh, I want to sell the top. Oh, I want to just take it from price point A to price point B, right? They're looking at all of these individual pieces that if they were to put them together, it might actually provide a cohesive strategy. But when you're just saying, oh, I'm going to buy this, and you don't have any information to back it up, there's no other parts of your strategy, you don't really have much, right? You have more of a goal, more of an objective than a full strategy. So when we think about strategies, well, why do we even have them to begin with? Everybody tells you when you're talking about trading that you want to remove as much emotion as possible from trading, right? All of your decisions should be purely based on analytical information that you have in front of you. You should never feel FOMO. You should never feel a necessity to get into a trade like we were talking about yesterday. You should never feel anything, right? The ultimate trader is essentially a computer, right? We know that a lot of the market is managed by algorithms. They do not show any emotion. They operate purely on an if this, then that basis, right? Because that's how code works. And in order to simplify building our strategy, I find it easiest to think like a computer, right? So let's actually pull up this editor and we'll kind of do this. I'll share my screen one sec. So like I was saying yesterday, and like a lot of you know, I come from a programming background, which is very convenient when we need to build a system for logical thought, right? The entire ideology behind coding on the back end, so any servers, anything that runs a website, is to do something if something happens, right? Computer code doesn't have the ability to feel anything. There is no emotional connection. The code just executes when certain things are true or false. So if we were going to look at this, let's just open up a new file, whatever, test. Yeah. Hide this. Sorry, give me 2 seconds here. Before I expose my actual code. We'll just open this up. Okay. So can everybody see my screen? Cool. So when we look at code, right, and the way that this works is we have a statement. right? So you guys are going to learn a little bit of code here just to simplify this thought process. So the only way that code executes, right? You have a statement and it's like if whatever's inside this bracket. So let's shift, we're going to type it out here. This isn't going to be actually code. Price comes to whatever we had, 415. So we're going to talk about SPY here. Right. And let's operate under the assumption that we were playing SPY, and I have my chart up behind me. And this morning, we knew that our level to break was right around 415. So if we broke 415, which was a pretty key spot for yesterday, just below the wicks right before close, we know that we're going to have a little bit of bullish sentiment. There's going to be a bit of bullish momentum. So what we're looking for, if we're going to think like a computer, is if price comes to 415, we're going to buy calls, right? Else, so if it doesn't go to 415, don't buy calls. Okay, and this is a really rudimentary example of the way that we should really be treating getting into positions, getting out of positions, the fundamentals of the whys. Why are we doing something? We need to start to reduce our thought to something as close to this as possible. In a perfect world, you would be thinking like a computer, right? Computers are the ultimate trading tool. You do not feel emotions. When something happens, you start to react to it. If it's not happening, if you miss a move, if it gets close but doesn't do it, you don't do anything because your parameters haven't executed, right? Like how many times has something almost come to your level? So let's say that price only went to 414.99, didn't hit what you're looking for. How many times have you jumped into something only to get faked out, right? Because your emotions, rather than what you stated beforehand, your strategy started to take over. As people, we have the tendency to very quickly shift away from a logical ideology and give way to our emotions. You know, like, do you really need that other drink? When you're telling yourself beforehand, oh, I'm done. Yet somebody offers you that beer and you're like, fuck yeah, I'm going to take it. Something takes over and you just do the thing, even though you've told yourself you shouldn't do it. Little things like that. And that's not just in trading, that's in life. This is something that just humans in general deal with. So it does carry over. And in order to be more successful in trading, we should try and create kind of a mental construct that we want to think like computers. We want to think without emotion. We want to set up very strict and very rigid guidelines for why we take things. So when we're looking at strategies, there are a few things that we actually want to look at that are kind of our variables, we would say. This is going to have a bunch of, these are in no specific order. This is just my verbal vomit from my notebook. We'll keep the Z, fuck it. It's Friday, little. Okay, so the 5 main things that I tend to look at when I'm even thinking about a strategy, when I'm trying to piece all of this together, ends up being location. So the location of the underlying stock. So what this is just the price of stock, right? Or ETF or whatever. Contract price. So the contract, this is under the assumption that we're only discussing options and we're only discussing taking naked options. So we're buying calls or we're buying puts. There are a bunch of other things that make this much more complicated. And we'll go into those as I start to get better at them in another lesson. But right now, we're just going to assume that we're talking about building a trade strategy for purchasing options. So we have the contract price, we have our expectation. So how much can the stock actually move, right? How much in the time period in relation to our contract, how much is it even feasible for the underlying to move, right? So when we're thinking about this, it's like if you were to buy, if you had the option to buy a contract and 1 second after purchasing, you had to be correct. So let's say it was, so you're trying to buy something out of the money, but in 1 second, you were either right or wrong. You had very limited time for this to come to fruition. That means that this contract is inherently very risky, right? The less time you have on it, the riskier it is. Versus the opposite of that, if you had unlimited time, you could buy a contract and then feasibly there's no risk because you have so much time, anything is possible. So that neither of those are really good in the real world, but it helps you open up your eyes to just how risky time can be or not having time, right? You take things to the extremes. You have zero time or you have infinite time. Infinite time means that there's less risk because anything could happen in an infinite amount of time versus, you have 1 second, not much can happen, right? There's very little chance. It's very high risk. You're either right or you're wrong immediately. So when we start to look at contracts, and you see this when we're starting to signal or when we're taking plays together, when we're talking about plays, trades that are 0 DT that are expiring that day, near the end of the day, there's high volatility. There is a very large risk associated with taking things that have very little time versus, things where we're taking more recently, a couple weeks out, there is a lot of time, which means that our moves, if we're right, are great, but if we're wrong, our contract price doesn't come down that much. This is important because when we're looking, we need to look to see how much is it possible for a stock or the underlying to move in relation to how much time we have. Like if we're looking at SPY and let's say we buy something, we're going to buy calls for 2 weeks out. Is it reasonable to think that SPY in 2 weeks could be at 440? Well, not really, right? So when we're taking things, sometimes we take things out of the money, and especially when I take those lotto plays, yes, they are very far out of the money, but they are still potentially viable. Like I would never go buy a 500 call for SPY 2 weeks from now. It's impossible. There's no point. So you need to find a sweet spot between all of these things. You need to find a sweet spot between the contract price and your expectation to justify your strategy, to make it make sense. After all of that, another thing that comes into play is our sizing. How much money are we willing to risk on this play? This one is the only one, let's take this out. This is the only one that isn't really part of the equation so much as it is just an important thing to understand. So when I showed everybody my PL statement on the week for an account that on Monday was at $700, now I'm sitting at 19 and change, right? So I almost pulled 200% on the week on this account, so 2x. My sizing on everything, and I tell this to everybody, has been relatively small. I've taken one trade that has been over $300 position sizing. Everything else has been in the $150 to $200 range. Now at the start, this is 30%, right? But even as I started to get money, I kept the same sizing, right? Because you don't want to increase your sizing right away when you start to make money, because then you can kind of just revert back to where you were. And we got lucky this week with a lot of really big wins. I think that everything that we took went 100% plus, or just right around 100%. We had a couple 500% plays. I mean, it was really a really great week, but the sizing on everything is small. And we will reiterate this to everybody over and over and over and over again. The upside potential with options is literally unlimited, right? When you buy a contract and you spend $15, you know the maximum amount of money that you can lose is $15, but there is no limit to how much money that $15 can make you. So when you get something that goes really, really well, that can turn it from $15 into $150 very easily. So you don't need to go in and, oh, I'm going to full port this. Oh, I'm going to do that. When people talk about full porting plays and don't understand the sizing element of this, it goes to show that they really don't either trust themselves because they don't think that they can just compound their returns, or they really don't have a strong understanding of how valuable these contracts can be. Like when you see it and you see plays that go 500%, 1,000%, it's like on a small account, if you're taking something, you're taking a contract and it's only $15 every time, right? One of those times it goes 1,000%, one of those times. So you try and limit your risk. You try and just not lose any money on the other ones. That one that goes is going to bump your account up to the next level. And then you kind of repeat the process. You don't need to size in crazy heavy. You need to understand that, like the earlier you get that, the better. And the earlier you realize that there's no need to compare yourself to everybody else on the internet, the faster you're going to be happy with the profit that you're getting. Like there was people when we were talking about NVIDIA yesterday, like, should I take profit now? It was up like 3,000%, or AMD was up 600%. It's like, fuck yeah, take profit. And then after you get comfortable with that, when do you start to accept profit? When are you okay with something running further? When you breach that mental barrier, you take your trading to the next level. So just kind of keep that in mind. That is my rant on sizing. So where do we go? Where do we go? So the strategy, like I was saying when we were talking about basketball, strategy doesn't need to work 100% of the time for it to be an effective strategy, right? You see, I guess let's just talk about the basketball side of things. Let's say you have a defensive strategy. You're going to do this thing over and over again, and it works on, 90% of the teams. And then you have one team where it just fails, right? Well, that strategy is effective for a large portion of your whatever you're up against, right? And then sometimes you need to tweak your strategy. The same is going to be the case when we're talking about trading strategies in the market. You have a strategy and you're talking, SPY is ranging, your strategy is going to be different than if SPY is incredibly linear, like we're running or we're coming down, but it's more directional than choppy. Your strategy isn't always going to be the same, which is why I think understanding these little components or kind of the thought process behind it is really important, and the things that you need to watch. So when we're looking at all of this, how do we kind of put it into practice, and what are we really looking for? Let's pull up Shop here. Let's go back out because this is a very easy one to visualize. Come on. Let's stop this. We're going to go over here. Okay, so with Shopify, what I was looking at when we took that swing a couple of days ago, right? So the first element, if you remember, because I can't have two of these up at once, apparently on my laptop, we're looking at the underlying price. So for me, when I'm looking at these trades and I'm looking for anything that I want to take advantage of, when I'm looking at the underlying price, what I want to see is I want to see it come down to what I've been calling, if you notice, I've been trying to use the terminology, isolated highs or isolated lows, right? So an isolated high is something like this, where there's nothing around it, to the left, to the right. So previously and in the future, it's by itself. This is entirely isolated. It is a standalone spot where direction changed, right? Immediately. When it got up there, we started a new trend. And it's not always just an individual point. You can see it over here. This is also the same thing, right? Isolated movement versus like consolidation. So it's an isolated move. Come on, work. I'm on my trackpad. Sorry. This is the exact opposite, right? Consolidation and isolation. These are the two things that I'm really looking for. So my strategy, first, you have to find these. And what I'm saying is I am going to do something at this. So basically my equation would be if price is equal to an isolated high, then I start to build out the rest of it. But that is the start, right? So for me, I identify these isolations, and you can do that on any time frame. I find that the 4 hour or the 1 hour is easiest to visualize because it includes after hours data. When you go to the daily, it doesn't. So I start to look for that. So that is step one for my strategy that I've been using right now. Find the isolated high, right? So then what do I want to do? Well, I need to inherently know, am I targeting this high and am I coming down to it? Something that I would visualize as support, or is it, I'm just going to do this for visual sake. Is it the opposite, right? Am I coming up to something that is downside and it's going to be resistance? So you need to know that, because that's going to determine, hey, am I going to take calls or am I going to take puts? Is this something that I would like to try and long off of, or do I want to go short here? I just inverse the chart for anybody that was confused there. So that is step two. So if we come to an isolated high, then I need to determine, are we attacking that high or that isolation from above or below? Are we looking at calls or are we looking at puts? So then from that point, I already know where my entry is going to be, where the highest potential is, somewhere that had clear movement. And this shop was so easy. Look at this. Like it's perfect. Shop had this massive wick, massive isolation. As soon as we came down to it right here, which is this line, easy play. Then we wrote it all the way up. So find the isolation for me, then do something based on, are we above it or below it? Then I need to determine, what contract I want to take. So I already knew that the high that we were looking at was 65. So I need to determine what my expectations are going to be, right? I wouldn't say, because we already have a high, and so, when we go up to highs, we have a tendency to pull back a bit. So I don't want to say, oh, I'm going for shop 70 immediately. You need to see how far you think that you can go. And I like the 2 week, 2 weeks have been good. So what I do next is, after I know the point I'm watching and I know the direction I need it to go, I kind of just gauge, how has it been moving recently, right? How has the stock been going? So all I needed to do here, come on, work with me, trackpad. No, it's gonna be easier from this way, is get approximately 14 days worth of movement, figure out the high and the low, and then you can average out what approximately you are going to get. And this is, very arbitrary, because stocks have freedom of movement. They can do whatever they want, but I like to use previous history in the opposite direction, just to see how have we been moving. What is the average daily move, right? So you take 9 divided by 13. So you're doing less than 1 point of movement every day over the previous 2 weeks. So if we flip that over, that says it's 9. We'll go over here, we'll go 14 days, we'll go 9 points. All right. So this is kind of a perfect thing. So I think that in the next 14 days, if we hold that bounce and we move in a similar trajectory to how we've been moving the previous 14 days, we have potential to, in 14 days, realistically be up at 65.54 or that high again. Okay, so that is the expectation side of things. I think that this is feasible given the existing movement and given where this high was. So then from there, because I need my contract to be in money by that point in time, I'm not going to take something that's like crazy out of the money, because that's unrealistic at this point. So I take a step down. So rather than trying to target 65, which is a little too close to being on the money, I go a step below 64, right? So 64, if all goes well, and in 14 days, we move the same way that we moved in the last 14 days, we would be $1.50 in the money. Okay. Does everybody understand kind of this general gauge of how I'm doing this so far? Crickets. 2 people. I think there's 20 of you. Give me 20 yeses. All right, 7 is good enough for me. So from there, that's why I picked a 64 call 2 weeks out, right? So we have now a feasible movement. We have a location that we have isolated as a point of interest. It's not going to let me zoom out, is it? As a point of interest, we've come down to that point. I know that we need to take calls if we bounce here, which we did. And I know that I can feasibly target 65.5 in 2 weeks. So we take the position that is just under that. So if we were to ride that linearly, and I mean, you saw it with Tesla today, sometimes stocks just fucking go. Like this is just a realistic expectation. And even in this, it wasn't entirely linear. There's a day where we pumped up, 4.5 points in a day, so it's not always that. You're just kind of taking a rough estimate here. So then after that, I need to look at the contract price. So when I had that idea, I was looking at the prices. I know 2 weeks out on smaller cap stocks like Shopify are relatively cheap. I don't want to take a contract based on my portfolio size that I'm signaling with that is over $1 at this point, right? I like to be able to buy 5 to 10 contracts at least, because then I'm able to trim out and take profit. If I am only able to buy 1 contract, and this is what I see with people when they're, playing SPX that shouldn't be playing SPX, you can't trim out. So you do that forever hold thing, and then you're either way down or way up. There is really no middle ground there. If you saw it today with Tesla, I trimmed out relatively early, but I trimmed out so I had profit to let the other stuff ride. So I was comfortable letting the remaining half of the position go. If you only have 1 or 2 contracts, it's really difficult to do that, right? You can't lock in profit if you don't have enough contracts to make that possible. So the contract sizing, the value of the contract in relation to your portfolio size becomes very important. I know there's tons of people, and I've seen it all the time, they have $1,000 portfolios and they're trying to fill that $800 SPX contract. That makes no fucking sense. 0 cents. You can't trim. It's a ride or die, You're either going to make a ton of money or you're going to lose it all. And when you don't have the flexibility of multiple contracts, that's when people end up cutting when something's down 20% and then it goes 100% because they were trying to maintain a good risk, but they only had one contract and now they have no more buying power. So it's like what I've been doing with this small account is I've been putting in 150, I've been putting in $200. And even though the returns on those, if they're not crazy, it's not going to make me $1 million, but I can take 5 positions in a day, right? I could take 5 different trades versus putting all of my eggs in one basket. I have been able to spread out the positions throughout the day. I don't miss anything. No one play is weighted heavier than any other play, unless we're talking about like the end of day stuff where I'm putting in, it was like $30 on Riot or $60 after I made a ton of money today on the SPX put that didn't go. Little things, right? But for the most part, main positions are, a fraction of the portfolio, not 50%, not 70%, a tiny bit, because I have to trust my trading enough to know if I took all of those, it doesn't matter if you take 5 small plays, right? If all 5 of those small plays go 20%, you're going to be 20% on your portfolio. You don't need to do it all in one play. You've never needed to do it all in one trade. People are always talking about, it's like, okay, cool, 5% to 10% on the portfolio for a day is great. If you do that and you compound it, you're going to make a ton of money. Now, think about it this way. Can you tell me that you can find a trade and have it go 5%, right? Can you find a trade and have it go 10%? I would say that the majority of people would tell me, yes, that's not a very difficult thing to do. 5 to 10% is very feasible. So if you can do that, you're just limiting your risk by only doing it piece by piece, incremental portions, rather than being, hey, I got one shot at this. Like you're trying to play it like it's that half court shot for $50,000, right? You got one chance. You have all the pressure on you. If you don't get it, you're wrong. There's no do-over. You're making it harder, right? Getting 5 to 10% in the play isn't very difficult. But when you have that in the back of your mind, you're like, I have to do this. I have one chance to do this. You're going to stress yourself out. You're adding mental stress to a situation that doesn't really need it. If I told you, hey, go find me a play and have it go, at least 15%. I'm sure all of you would just go and you take one contract and be like, yeah, fuck, cool, done, easy, no problem. Now, if we flip that and I'm like, hey, here's $10,000, I need you to take this 15%, you're going to start stressing a little. You have all of it. You have one shot. There's no do-overs. So when you're thinking, hey, how much of my portfolio should I put in? Think about it that way. Like, can I take a couple of small trades and still make 10% on the portfolio? For sure. For sure you can. Can you do that every day? Probably. You can probably make 10% on the portfolio that way just by, hitting bottoms and not even writing it up. You could do that in 5 seconds on a chart. But you don't need to do it all at once. There's a lot of time in the day. Where are we? Okay, so is there any confusion? Are there any pieces of this process, like just the general understanding of the things that you need? And just to bring this back to my little code for you guys, these things, this is all you need to think about, really. Like this is the simplest way to think about the pieces, the little Legos. Like I was saying, the Legos that like make up a Death Star, or one of those big, 10,000 piece crazy ass Lego sets that people build. That's all you need, just little building blocks. Is there anything that you feel like we're not covering here? Is there anything that you feel like you need to have explained a little bit better, or maybe we can go into a bit more detail? Yeah, I mean, 10% and 10 potential trades is reasonable for sure. But like, here's the other thing too. I've said this before. Don't feel the need to utilize all of your buying power every day. You don't need to do that. Like I had said it when we did our moderator QA with Hassan, that I started to feel better about myself when I had days where I had buying power left over. Like if I look at it today, I think I still have, let's see. Yeah, so the account is at 1900. I still have 1200 buying power left. Like I didn't use it all. I didn't even use half of it today. I'm great with it. So you can definitely do that. Focus on how to compound. Yeah, I mean that's it. It's just taking the smart plays and not putting your money in it. The thing is, if you can only take 1 to 2 trades a day, you got to work with it, right? You're not going to become a millionaire overnight being able to take 1 or 2 trades with a small account. It's a slow, fucking grueling, heart-wrenching process. It's going to take time. Some days you're going to make $7 and you're going to be like, am I doing the right thing? Is this really doing anything? Am I moving the needle? It's slow. But then you'll have one day where you hit one trade and that one trade will take you up 30% of your portfolio. And then you have, a couple small trades, couple small trades, couple small trades, then you'll hit another big one, right? That's good about the diversification too, is because you're giving yourself more opportunity to have those big moves happen by playing a bunch of different tickers, by playing a bunch of different, individual trades rather than lumping it into one. How many times have you been like, oh, I've taken this trade, and you go over and Netflix is running, but you've already used all your buying power, so you can't do anything about it, or you see this is running, but you've already locked in your money into one trade. You don't want to miss out on things, but you don't have unlimited money, right? So the only way to meet in the middle there is to just take smaller positions and have more opportunity to enter more things. Planning levels for trimming. I think and actually I did have this written down, or at least it was in my head. It depends, right? Because there are certainly at the beginning, there are levels that I'm looking to hit. But like you saw today with Tesla, when you hit a certain percent, you got to just be like, fuck it. I need to take some money off the table here. Like those trims, when I was at 400, it went up to 450 for a second. Like those weren't trims based on levels. Those were trims where I'm just like, I am happy with this money, right? So like where I was looking to trim, and I was trimming before we got to the previous high. So what was it, 192.5 or whatever. I was trimming out a bunch there, and I signaled that I was trimming there. So that was a trim that was based on a level. We were approaching a spot that we had rejected 2 days ago, or a day in pre-market, and I wanted to take some of my risk off and lock in some profit. So that was a level trim. But then as we started to rip, and that was around 200%, we started to rip 300%, 400%. At some point, you're kind of like, hey, cool, I just need to take some money off the table here. I'm not just going to hold this indefinitely. And then it came back down to, it was like 350% when I cut the position, right? I could have held that forever. I had 2 more weeks on it, but I was happy with where it was at. I didn't like the setup anymore. That was just purely, this is enough money for this trade. I'm going to bring back that money. I'm going to get that buying power back. And then on Tuesday, we'll revisit it. Yeah, you can't get greedy. Fuck it. You're better to trim. You're better to sell in profit early than not sell and, go red. So that's the other big thing with all of these trades that we've been taking. As soon as we get to like 20%, I tell everybody, fuck it, we're putting stops in profit, right? I would rather not lose anything at all and make no money than go even slightly red, because that means that the trade is free. As long as it doesn't come back to where we entered, you're set, right? And if it does, you're indifferent. It's a win-win. There's no way to lose money. Yes, sometimes it comes back down to that entry level and then runs after, but I would rather take that risk than risk money, right? So you're like getting a free bet doing it that way. If it goes up 20, 30%, you're already past, like, you don't, if your normal stop loss is already 20 or 30%, why would you let it go now 40% negative from there? So now you're minus 10. It doesn't make any sense. Never do that. You don't increase your stop loss as you make more money. You decrease it. You move your stops up. For if you're looking at the weekly, I mean the wick and the body are both important. I think that I would look at the daily though, rather than the weekly, to kind of figure out your better entry points. It's just a little bit more granular, because you can see a big wick down, but like to actually see how the days played out, I think is a little bit better. Unless we're looking to take things for, like, the weekly is important if we're going to swing stuff, for 4 or 5 weeks out, months away, I would look at that. But because I'm taking things, I'm really only planning to hold them for a couple of days. I think the daily is a little bit better to do that. How do you work on holding your trades long enough to maximize profit? I think that just comes with a little bit of experience, right? So we're constantly looking at levels, and we are trying to, as we start to get a push up, move our stops into profit. So today with Tesla, we moved our stops up into profit. You could have just fucked off for the whole day, right? Stops were in profit and they never came back down. You never needed to manage it. When a trade runs, it just goes, right? So you will never catch the high. You will never catch, it's not reasonable to expect it. You could have sold, I know there are people that sold Tesla today at 100%, right? It went 400%, but I would still be happy with 100%. Where it gets easier to start holding these things is like when you have 10, 20, 30, 40 contracts, and you can start to trim out the entire way up, right? So today I only had 10, but I was able to hold, I only held 2 up to that 400% mark. Like I held a total of 20% of the position, right? It was not the whole position, right? So when you have more contracts, you're able to take money on the way up, which helps you then hold those last runners because you've already made money. You've already made all your money back. You're already green. So that's what makes it easier to hold. If you had one Tesla contract and you held it the entire day, I would call you an idiot, because you should have taken profit when it was at 80%. You should have taken profit when it was at 100%. To zero or hero, something like that is kind of crazy when you only have one. But when you have 10, you have 20 of them, then you can kind of take money on the way up. And that makes it easier. Those last 2 that held, they could have gone to 0 and I still would have been green on the play, right? So then I have no stress. I'm entirely free. If both those contracts that I had as runners went, to 0, which is impossible because there are still 2 weeks on them, I still would have made money. So that is kind of the game changer. Once you start to build your account up to that size where you can feasibly do that you can, start to maximize the profit a little bit more. If you have one, you should be taking profit. Fuck it, take profit at 40%. You only have enough money to take one contract, and that 40% on that contract is probably really valuable to you. There's nothing wrong with doing that. And if you're holding it, you're trying to get the whole move, that's how you get burnt. So you just gotta, like I said, it always comes back to being comfortable with taking profit. And if you are not comfortable with taking profit, you need to look at yourself and ask why you aren't. Because there is nowhere else in the world that you're going to put money in and get 40% back in, 30 minutes anywhere. A casino, maybe. It's very difficult. So why aren't you happy with 40%? I'm ecstatic that it was 400%, but you have to think about it that way. Like, where can you go and just make that much of a return on your investment that quickly? And then who are you to not be satisfied with that? Like, that's really a question of self-reflection. Why aren't you happy with that? Why? So I think that's when it comes to the holding, when it comes to the not taking profit, when it comes to being too greedy, why are you not happy? Is it because you think that your losses aren't anything in relation to somebody else? Is it because social media has totally twisted your perception of what making money should be, or what is a good return in that amount of time? Reflect on that. If you've had that problem, because I know that greed is rampant in this industry, but the only way that you're going to really grow and not just keep having to fucking reset your portfolio every other month is by kind of taming that. So you gotta look in the mirror. Yes. So I think Shopify has the potential to get up to 65 again, but the beauty is we just needed to kind of move in that direction. It's feasible to do that, but as you saw, we only moved up like 1.5 yesterday on Shop, and it was 100%. So we don't need to get all the way there because we have time, but I want it to be possible to get there. Yeah, so it's everybody goes through that, right? It's a learning curve with understanding the comfortability with yourself as a trader. I went through closer to the start when I started trading. I used to take profit too early, and then I went through a period where I took profit too late, and now I'm getting better at that, like the Goldilocks, like this one's just right. It takes time. You see it I didn't really have anybody that was teaching me that part of it. So I think that it's good that we're able to be here for you and kind of discuss that feeling, because it's tricky, right? You see people and it sucks and you get FOMO and you feel bad. You see somebody, oh, they hit 400% on a play that you only got 40% on. The sooner you break that cycle and the sooner you can be happy with just the fact that you got 40%. Like, there are people slaving away and you just clicked a button on a computer and you made 40% on your money. Like, think about it that way. Maybe don't compare yourself to other traders, just compare yourself to like the rest of the world that can't do that. And then you kind of put it into perspective. You're like, oh shit, actually 40% is pretty good for not doing anything at all, sitting in my pajamas on a Discord server, bullshitting with people. Oh yeah, I made a couple $100. Like, it's the most ridiculous thing. So like, don't compare yourself to other traders, because like Hassan said when we were in VC today, there's always somebody bigger than you. Like, Hassan and I trade with a pretty good amount of capital on most days, and there's always gonna be like, dude, there's fucking institutions worth billions of dollars. Like, I'm never gonna be the best trader. It's like, comparing yourself to other people is just you're setting yourself up for heartbreak. I don't like to trim it like, oh, at 10%, at 20%, because with the small contracts, they tend to move. If they start moving the way you want, you've seen it, they go exponential very quickly. So on something that's 10 cents, 15 cents, when they move, if you move up at all, you're going to be at 30% right away. So it's like, there's rarely a 10% move on a 15-cent contract. Like, you're gonna be up, 20, 30%, or you're going to be at break even, just because of how the spread is. You're gonna feel okay. You have a small portfolio. Yes. You are gonna see somebody that made $100 and you made $20, and you're gonna think that you didn't do anything. But if you keep making that $20 every day, right? Soon that $20, now you're making $50 a day. And then not long after that, you're making $100 a day. Not long after that, then you're starting to make two, three, four. Like, it's the compounding. Like, everything seems small at first. With, like I said, with the account, if you look at my TOS PL statement. Let's see if I have the screenshot here for the $700 account. I think, like, I started at 691. I made $40, right? $40 the first day. I think I made $40 the second day. And then on the third day, we hit that Google play, like just all these small, and then sometimes you hit like a fucking crazy play and it goes. And that play took the portfolio, it was like 89%. And then that with the SPX plays, and it was all small sizing. Like, some days are just small. I didn't do anything different on those first 2 days. Some plays just go, right? And I wasn't like, oh, I'm upset that I only made $50 on that account. I was like, not upset at all, because I know if you just keep making money, eventually you're going to hit something and it's going to be a gold mine, and it's going to take that account to the next level. And then from there, like, so I was making $50. And then yesterday I made $700, and then today I made $500, right? Now that $50 thing, because I've now almost doubled the account, tripled the account, that's, now we're starting to get momentum. It doesn't always happen that quickly, but it's all about compounding. It's about those small wins. And then when you get a big win, it kind of helps push you to the next level. Yeah, let's see if I can pull something up here. What were we looking at? So for Tesla, let's see where this closed. This is here. Where was the actual close? I was looking at, I think it was right around here. So I was looking for the isolated low. So this is our entry. This is our reason for entering yesterday. We had held, so we were in a clear uptrend, right? Higher lows across the board. And we had rejected, where are we? This area right here. Not my price line. So boom, little isolated wick here. It kind of led to downshift, right? Came down. Clearly something there. And then we came up and we were trying to challenge. So we were consolidating, came down to this middle of the day. And then you can see it's this far line that we bounced off of it, right? So with a ton of volume, we were very strong, held above the isolated low. So we went through it, but ended up holding it. And I was comfortable trying to take a long position at this point, right? We had an uptrend, bounced off the isolated low that I was watching, and we held it. And this is on the 4 hour. And then it was just a matter of trying to get the fill. So I know Tesla 225 was a bit of a stretch on this one, in all honesty, but clearly it fucking paid off today. Let's go here. So in 2 days, we moved about 5%, or sorry, 5 points. But if we look at the possibility for, we were like 20 points out, right? 20 to 25 points out with 14 days, which kind of put us at like more likelihood of 215 to 220 than 225. But the contract was pretty cheap, so I was okay with kind of risking a little bit more. Definitely riskier than the shot play, a little bit more ambiguous in terms of the actual isolation point that was kind of holding. But raising your hand, sorry, I'm on my laptop when I'm on Zoom. I don't have multiple screens, so I'm trying to figure out where the fuck Zoom went. Oh my God, that's why. Oh, fuck me. You can't visualize it. You can't just see it in your head. Okay, so here, let's zoom back out. This is the isolated low that I was watching. So right around 184, which yesterday we came down, we broke through, but ultimately had pretty strong push back up. It showed a little bit of bullish momentum when we were already in an uptrend, right? And then it was just a matter of waiting for the fill. We did come down a little lower than I had hoped. I know that we tried to press up. This is from pre-market, by the way. You can see, you can't really see it on the 4 hour. But on the 1 hour, you can see that there's this pre-market, came down, held through 184 pretty strong. I'm like, okay, I think we're good. So that is where I decided this was like, add Tesla to the watch list. And then I was just waiting to get that 0.3 fill, which it ran up and then we didn't get, and then it dropped down and I had already removed the limit. And then I kind of liked that it was pushing back up through 134, right around there. And then we finally got the fill at the end of the day that I rushed for at 0.31. But you can still see similar concept, a little bit harder to visualize. That shop chart was probably one of the cleanest charts that I've seen in a long time in terms of the isolation being that obvious. So isolation, I knew we were coming from the upside, so I knew I wanted to take calls if we held. We had an uptrend, right? So higher lows. People talking that fuck up again. Okay, you can't see it. Cool. So that was the main reason for that. So same but different. There's about a 20-point range on Tesla from the previous 14 days. We just got, in all honesty, this is what I'm saying. It's like, I had no idea that we were going to pump like we did. That's super helpful. I did not go into this trade anticipating to get 400% in a day on a swing trade that's 2 weeks out. I would have been happy with, 50%, 60%, but sometimes it just goes, right? You just have to protect your capital and compound those little gains until you get one of these, until you get a Tesla, until you get a Nvidia, until you get a Netflix, anything that ran today. When those come, that helps push you to the next level. So just to recap what we've talked about today, understand that you're going to need to build your own strategy, right? I can be there to guide you, but I can't always be there to hold your hand. So you can take little bits and pieces of what I do. You can take exactly what I do. When do I enter? Well, I wanted to enter when we held it on the 1 hour, as soon as we held it. And that's where I wanted to enter. The price is just too expensive. So I just needed it to come down a little bit. I wanted to enter, where are we? Zoom chat blocking my shit. I wanted to enter here. Strong push down, very bullish sentiment over 184. This line right here is the isolation line. That's when I wanted to enter. It was just, I just wanted to, when it saw the entry, I'm like, oh, I want this contract a little bit cheaper than what it was. I think it was at like 0.32. I wanted it at 0.3. I like see where it's at. I'm like, I just wanted a little bit less, and then I didn't get it. But this was the candle, right? We come down, we hold the line that I wanted it to bounce off of. That was my indication at that point. And then it kind of broke through that, but then we came back up here and held it again. So when we finally held it again, that's where I'm like, okay, I'm cool with swinging this. We held it 2 times in the day. It's one of those things. It's hours in front of it, and we can do more recaps on this as we go forward. It's not something that you're going to just be able to pick up in a session. Okay, so even suck. So where I fucking hate this same thing. I'll show you this one more time. My line gone now? Where'd my line go? The heck? My line disappeared. No, it's this. Okay. So right around here, when we had this massive sell-off from like 210, we came down to 184, right around 184, right? And we kind of hovered there for a bit. And then we tested it. 184 is kind of like the middle point between this low and this high. And just kind of held. So 184 was the main thing that I was watching, because the last time that we were in this area, this was the consolidation, right? So I wanted it to hold 184. Then you can see that this is validated by the price action of yesterday or 2 days ago, right? Because you're looking, and where are we? We are here. We came back up. Where did we try and push to? Right around 184. Right, that was right around where we rejected 2 days ago. So then going into the next day, we came, and something that I was looking for in terms of a level had flipped from being a resistance now to a support. We're holding it rather than under it. It's a good sign. We're already in an uptrend. This is the same spot that we needed to hold when we were in the consolidation like a while ago. So that's why that was the support. But we can touch on this. I want you guys to just try and visualize as you move through next week. Try and think like you're a robot, try and build a mental structure that helps you to eliminate the emotional element of all of this, right? Think if this, then this, right? Don't say, oh, I wish, never, I should have. Those things, computers don't say that about themselves, right? If it does this, then do this. Rigid structure. I'm not saying start executing that way right away, but I think that you should start trying to think like that, start trying to change your mentality to be closer to that, because I think the more emotion that you're able to remove from your trading, the better that you're going to be at the end of the day. And that is it for me right now. I think that everybody deserves to go enjoy their weekend. It is 5 o'clock here. So I am going to go stretch or something, maybe go to the gym, and I will catch you all on Tuesday. Don't forget, market's not open Monday, bank holiday, everything's closed. Yeah, go have some fun, and we will pick back up on Tuesday. Thank you guys for coming.